G'day expats and welcome to another episode of Expat Chat, episode 69 today. And as always, joined with my friend, business partner, mentor, work colleague, Brett Evans, Managing Director of the EMEA region. How are you going, Brett?
Sweeper of the office, clearer of sand. Mate, good, thanks. All good over here. We're just discussing and apologies for the folks out there if James's voice, my voice doesn't sound usually on song. We're all going through this flu that's going around right now. So, and also apologies for the delayed schedule of these release of these episodes. You know, we're going to get them out as quick as possible, but there has been a bit of a delay there. So normally we like to release these out every week on a Friday or Saturday. But yeah, we'll be getting back to that once we feel a bit more human-like. I mean, mate, let's be honest, man flu is the worst thing you can ever have.
It is. I've somewhat relapsed. I was feeling good on Saturday, and this is going back last week as well. And then it's like on Monday I had no voice. Tuesday barely had a voice, and it's just slowly been coming back. But I've done probably 4 raps in the last week. It's not COVID, so it's just flu season. Coming out of flu season, I guess.
And those new to the episode, and if you're watching, you'll see a gentleman on my right, your left. If you're listening to us, this is the other person in the voice. It's a gentleman who is often confused as my Siamese twin, James Ridley, who's the Managing Director of the Australian office who specialises in clients in the US and the Asia region, mate. G'day.
Absolutely, mate. G'day. And obviously, I'm pretty lucky today. I'm staring out the window. It's a lovely, beautiful blue sky on the Gold Coast, as always. Felt really bad for a client that dropped in the other day because the weather was a bit miserable. And Gold Coast, it's rare that we get those rainy days, but La Nina, she's hanging on for dear life.
Not letting go.
No, that's right, man. As always, digressing, and got a good topic today. It's one we haven't really workshopped or deep dived into, and it impacts expats all around the world. And it's something we don't often think about, to be honest, when we leave Australia and head to a new location, a new country. So today I thought, why don't we dive in a little bit to what a double taxation agreement is, or in general, a tax treaty. So before we jump into that, let's get the little jingle out of the way, or the legal disclaimer.
Yep, all the information that you're about to listen from our hoarse voices should be construed as educational and informational purposes only. Please do not interpret this as personal advice. If you do need to get personal advice, give us a yell.
Absolutely. Well put. Getting that down to a T now. Now, today's topic, double taxation agreement. I mean, it's something which I guess is a really good talking point and ties in well actually with the residency rules and what the that new modernising residency rules has proposed within that Board of Taxation report, which is just terrifically dry reading, that report. But again, it's the single probably biggest tax change that expats will experience probably in our lifetime.
And then some. Yeah, you think about it. The last time came out, well, last time it was amended was 1936, and we're now in 2022. So what's that? 84 years, between drinks. So if they do another 84 years, it'll be 2006. 2106. Just to put in perspective.
Never know, mate. Listen, healthcare and medical advancements, they're going a long way. We're definitely living longer than, I suppose, our grandparents. But with that in mind, it's a good topic because, the proposed residency rules, unfortunately, it's creating these inequities or inequalities depending on where you live. I mean, let's look at where you're based, Brett. You're in the Middle East. Right now, I don't know too many countries that have a tax treaty or double taxation agreement with other countries when you're in the Middle East. You look at Qatar, you look at UAE.
Actually, the funny thing, I will clarify that UAE actually has a lot of DTAs with other countries, including
What's the point of them, though?
Yeah, well, it's interesting because a double taxation agreement not just applies to a person, but also companies as well too. So a DTA typically useful in terms of how do you treat VAT versus GST and all those sort of things. So, believe it or not, and I have spoken to local government officials about this ad nauseum in the past, and let's just say their comments were quite convincingly, there's going to be a lot more water to go under the bridge first before the UAE gets a DTA with Australia. So I know that right now they're looking at doing CEPAs or CEPAs, how you pronounce it, which will then lead to a free trade agreement but it sounds like a DTA is a step too far in the short term and the medium term anyway.
Absolutely. And I mean, it's, when we look at a lot of DTAs, they're honestly usually quite old, to be honest. The one I've sort of always drilled down on hard is the one between the US and Australia. 1983 was when it was first drafted. There's been one or two amendments, but there's not too much in there. The biggest issue that a lot of my clients and Aussie expats in the US have is around the old Australian superannuation argument. Yeah. That's right. I mean, what's a bit disheartening about the DTA is you look at the UK. UK have got a similar DTA as us, but their UK pension system already existed when they drafted DTA. They had something already governing sort of the private system, the different pillars as part of the retirement system.
It's classified as a foreign pension, yeah.
That's right. Whereas Australian super, it was really only formally coming into legislation, I would say, 90s. Before that, it's sort of the case where sort of some privatised insurance schemes, you could almost say. But that's what we miss out on. So super's not included, so it really comes down to a unique type of treatment by the IRS, and it's the same what the ATO does on your 401ks, your IRAs, your Roths, all those sort of things. So it's tit for tat, I guess you could say. But at least they were able to get Social Security and the age pension in those DTAs. So it's picky battles, but I think a lot of Aussies would agree that they would prefer to have Australian super included in that DTA over the age pension. But
I think let's actually go to the high level now and just actually explain what a DTA is, because I think that's a good place to start. So for the folks out there, you probably heard the phrase DTA or Double Taxation Agreement. Essentially, it's an agreement between two countries in terms of taxing rights, and the agenda or the concept is to avoid double taxing. So let's say, for example, you're living in Singapore, and due to your business operations or personal matters or personal circumstances, you might have assets in both countries, incomes in both countries. What it essentially does, it cuts up the pie and says, okay, ATO, you tax on this and we won't tax on this, and we'll tax on this, but you won't tax on this. And it's just a very fair and equitable way of doing it. The addendum to that will also be a phrase that a lot of expats haven't heard of before until the new proposed residency rules came out, and that's the tiebreaker clause. So do you want to run through what a tiebreaker clause is and how that applies?
Yeah, well, I mean, when we look at even just the Board of Taxation's proposal, on the surface, tiebreaker clause is about each country's residency rules and trying to work out, okay, well, if we break it down, and if you're temporarily out of one country and in another country, but you're still meeting the ordinary definition of the tax residency rules, say for the United States, even though you're in Australia for, say, 80 or 90 days, catching up with friends, family or whatever, then you'd technically still be an ordinary tax resident of the US, which means you cannot be a tax resident of Australia at the same time. So you keep your non-residency intact. So tiebreaker test is purely around residency, trying to govern individual expat situations on when they might accidentally be deemed to be a resident of another country and switching over. You probably often hear, I suppose, in a lot of residency rulings, especially in the last 20 years, sometimes it is, they do drill down a little bit on the tiebreaker test. But one of the, proposals in the modernising tax residency rules was stated that even if you breach this 45-day factor test, even if you breach that, and as per the DTA and under the tiebreaker test, if you were still, say, a US tax resident, even though you'd been in Australia for more than 45 days, let's say 70 days, because you've gone past that 45-day factor test, and you're still a US tax resident, well, that can mean you're then still a non-resident of Australia. The issue that this creates for all those expats that are in countries without a DTA, it immediately puts you at a disadvantage because you actually need to abide by the 45-day rule. You don't get this flexibility, or I guess what you'd call this grey area. Right now, I probably suggest that to a degree the current residency rules are a bit grey. But one thing is clear, that with this new residency rules that they're providing, they're introducing that bright line test, 183 day less. We don't actually have that right now. That's more of a secondary item. So most countries that have good tax residency rules, they do have this bright line test. UK has one, Singapore has one, the US definitely has one. That's the substantial presence test. So that's a definite update that we need as part of these new residency rules. But the tiebreaker test is there to govern when your area is a little bit grey and you're travelling back and forth. Often DTAs, they sort of govern, I suppose, how income will be taxed based on usually its source as well. That's always a key consideration, where it's source. And when you read through some DTAs, you're always going to hear the words contracting state. They love that, contracting state.
Who is the contracting state? Yeah.
That's right. That's right. So often it means obviously not being double taxed. I mean, it's in obviously the name, but and it also means the sharing of tax credits. Okay, if you're paying tax in Australia on something, you get a tax credit on the other side. Often when we don't have a DTA with a lot of countries and there is some sort of tax still paid, often the ATO will still acknowledge, I suppose to a degree, tax credits. I think probably a little good example, and I'm going to pick on the US again because it's probably easy, is, well, we have obviously a DTA with the US, but you've also got state taxes. State taxes, they're almost self-governing in the US, the way they're going right now. And even if you're paying state tax, California is probably the easiest, which is one of the highest, same with New York, you still get a tax credit from the state tax that you pay on the Australian side. And if you're in this sort of situation where maybe you're living back in Australia, but you're still paid wage income from the US side. So, and you're still having to do a US and a federal and a state tax return. So that's important to keep in mind as well.
And I think also too, the one thing, it does sometimes afford you a bit more flexibility in terms of how you manage your affairs and what classification you have. I remember in the past, I've had clients who have elected to be a resident for tax purposes living overseas while resident in a country that has a DTA, because what it means is the tax rates weren't too different between Australia and those countries. So they weren't losing anything by protecting themselves under the DTA, but they were able to afford themselves 50% capital gains discount on property and other bits and pieces. So it just gives you a bit more flexibility unless you reside in a country like Hong Kong, UAE, Saudi, Portugal, Greece. Actually, Greece, they're in negotiations right now, but there's some other major countries that don't have DTAs, and that's where it gets interesting. And to me, it should be becoming more popular in an expat's vernacular, in terms of when they're about to expatriate and move overseas. How, does the country I move to have a DTA? Because that can affect you in so many other areas. And as I said before, a DTA, when you're looking at the tiebreaker clause, it essentially says you can't be a tax resident of two countries, so therefore you're a tax resident of the country that you reside in. So if you live in Singapore, but you do a lot of work in Australia, or live in the United States and do a lot of work in Australia, you have that protection. Whereas folks like us sitting here in the sandpit, it's not something we have that luxury afforded to us. So that's why one of the reasons why we want to jump on the call, because it's important as we move through the process of Labor government reviewing the tax residency rules and proposed legislation coming out, by helping the folks that they understand DTAs, they are going to see a lot more reference to what a DTA is in the coming months and years as these new rules come out, because that's going to be a very, very strong catalyst for them to review their circumstances and say, well, rightio, I plan to go back to South Africa in 45 days, but I don't reside in the country with the DTA. So therefore, let's look at those 4-factor tests, bang, bang, 2. That's all you need to fail. And I've failed 3. So in that case, that's when you need just to, understand the concepts, understand what's going on, and, go from there. So
absolutely. When you look at a lot of the DTAs, unfortunately, they are quite old. There's usually amending protocols, and probably a lot of the amending protocols in recent years has been around the tiebreaker test. But you look at them, and a lot of DTAs, they're often drafted between the 80s and I'd say even sort of the early 2000s, that sort of 20-year gap. So there's a lot of tax changes that happened in the last 22 years, which doesn't encapsulate. Most DTAs they won't usually encompass the retirement system to a degree. There goes my voice. And it does mean that superannuation, unfortunately, isn't often captured. You look at the DTA between the UK and Australia, super's not carved out, unfortunately, much like the UK pension system to a degree. However, we do have the ability to use the QROP system when we're looking at super and UK pensions. So that's really good, but that's not a DTA item. That's just
tax law. Yeah.
That's it. HMRC and the ATO, they actually agreed on something, which was good. And unfortunately, they did change the rules 2015 and 2017. So it does make it a lot harder to navigate that space. But it's a real shame. You really wish that some of the major trade partners and I suppose Australia's friends, it would be good if they did amend those DTAs to make them a lot more favourable. The IRS loves to tax and know everything, so they will do it at every opportunity, every turn. But they really need to update. There's a couple of good sort of community groups that really advocate for that, updating those treaties.
Yep.
But I guess it's to ensure, one, not double tax, two, how incomes are typically taxed at source, and who gets the taxing rights based on the contracting state, and then the sharing of tax credits as well.
It is, mate. So, look, I can tell your voice is going and so is mine. So I think we've covered off on a little bit there, a bit of housekeeping, obviously, for folks out there. If you do have any questions that you would like us to raise on this podcast, the link down below, click on that. A lot of folks have done in the past. We've received a couple of reviews in. Keep that coming, guys. We are very vain, as you can tell. So we'd love to hear how much you're loving it. No, I'm just joking. But, it is nice to get those reviews because it does help get the channel out there to other expats. And last of all, we've got that Australian Expat Financial Forum Facebook group. So a link down below as well too. So, mate, let's leave it there before you and I fall over. And we'll catch you on episode 70, which is the next one.
Beautiful. Thanks, Brett. Thanks for dropping by. Talk soon.
Thanks, mate. Take care.